Trade Genius.
Hey guys, welcome back to another edition of the Trade Genius podcast. I'm Philip, and as always, with me is Bob Kudla. How you doing, Bob? Today,
I'm doing great, Phil. How you doing?
I'm doing good. So, as you guys see, the title is "The Great Fall of China." So, Bob, your topic that you chose today, getting into China's problems and how that also plays into commodities and availability of commodities, and how these folks at home would deal with investing in commodities. So, take us into what's going on over there in China.
Yeah, so if people have been following the news this weekend, is Xi Jinping has decided to purge the Communist Party of reformers, and I would call liberal thinkers, and I don't mean that in terms they're liberals, in terms of not the orthodoxy of the Communist Party. You know, basically, he's moving more towards Mao and less towards Deng in terms of China's future direction. You know, and a quick little history lesson here is that, you know, after Mao almost destroyed the country through his, initial exploits and then also the Cultural Revolution, there was a counter revolution, and you had Chairman Deng get into power that had a mindset of liberalizing the country, modernizing the country, and basically fostering a relationship with the West. And there's been a lot of resistance in the last 10 years to continuing down that path because, you know, China historically views themselves, as basically the Middle Kingdom. They have a high opinion of their culture, and I'm not criticizing it or praising it. It's just that's their mindset, and I think there's a bit of an inferiority complex because of the U.S. and the U.S.'s hegemony around the world, and I think basically Xi Jinping is. I think he's tired of it. And I think he's tired of what he perceives as meddling in the affairs of China's affairs. And I think this all came to a head here with him taking the reins, you know. So everybody always thought that China was monolithic. Well, it wasn't. And now he's trying to impose that monolith and impose his vision for the future. And it's almost like shades of Mao in the Cultural Revolution. And I think, you know, tactically, this might be a brilliant move on his part, but strategically, I think it's going to prove fatal for him and the Communist Party because the issues that they have, Phil, are structural. They're not like in the U.S. where you have, you know, the errors in which we're creating in this country are relatively easy to correct because we have a more liberal economy that a lot of voices and a lot of ideas get to be practiced. And in China, now there's only one voice. And what just happened to, Hu Jintao means that nobody's going to stand up to Xi Jinping. And I mean, and he's going to make policy errors. You know, I don't care how good you are, you're going to make policy errors. So that to me means that they're going to take the country to ground. He's been locking the country down left and right. There's reasons for that other than the pandemic response is, you know, he has number one, he's locking down parts of the country that are probably weren't, you know, firmly in his camp. Number one, and number two is that whenever they let demand increase, there's shortages in the country. And so one of the charts I didn't send over to you because I started sending so many your way is that whenever they let demand go, you have electricity shortages in the country. And then you have Three Gorges Dam that's not producing electricity because there's not enough water flowing through the area. And so you have a lot of hoarding going on in China. And the chart that I want to show you next is that there's a lot of fear in China now about not having enough. And so one of the things that we've been watching, you know, in the U.S., we're really fond of talking about basically there's no gold and silver in basically in the custodian accounts with the New York or London bankers. Well, China's big on hoarding copper for collateral, and it's been wiped out. So we don't know where the copper went. So it's either the Chinese government now is hoarding it, but it really doesn't matter to me and you as a trader. All that matters is that there is not copper for the demand. And so expect copper prices to rise. Another piece of data that I saw was we have basically 4.5 days of supply worldwide in copper inventories. So what that does, it basically kneecaps the renewable energy market because copper is such a critical component of that market. At the same time, the liberal progressives in the West are trying to kneecap the fossil fuel markets, with these predictable results. So I think it's going to become problematic, and that's one of the reasons why we bought, FCX. I'll talk about that stock in a second. Is that because we're going to have a looming shortage of a very, very important commodity, and I don't think the West is going to be able to react fast enough to it without raising prices quite a bit.
So this repositioning by Xi is effectively causing them to hoard. If I'm hearing you correctly, for us as investors, it's effectively causing him to hoard the commodities to shore up things domestically for them, and we might have a nice long trade in things like copper.
Yeah, and a lot of people say, well, where did the copper go? The only place they can think it could have gone because of all the lockdowns is back into the Chinese National Reserve. And one thing also too, China is not reporting a lot of data anymore. They're reporting 10% of what they were reporting 10 years ago. So they're being very opaque now. And so my thinking is that, well, it's probably gone into the reserves, and China's either going to use that as leverage or they're going to use it for their own internal domestic growth, because I think he realizes that he's not going to be able to trade with the West because he saw what happened with Russian sanctions. So he's going to probably try to create a boiler room internally. And the next chart that you're showing here is not only just copper, but coal. So China and India have been importing coal like there's nobody's tomorrow. And that's the reason why we bought BTU. I don't have that chart to show you, but BTU and Arch Coal are rapidly becoming extremely cash flow positive, and expect some big moves in these stocks of the coal companies here, at least in the short term, 4 to 6 months out. That's basically an eternity for traders like us. So I'm looking for big explosive moves in BTU and in Arch Coal, but I only own BTU right now because their catalyst is coming up in these next, I would say, 4 months. The reporting they're going to do at the end of this month, and also the reporting they're going to do in January, are going to show that now this company is cash flow positive, no debt, and they're going to be able to buy back shares and also to pay heavy dividends. And to finish here too, here's the chart of Freeport McMoran. Check out the chart. It's a beautiful inverted head and shoulder pattern, and it's right up against the neckline on Friday. Pulled back a little bit today to be expected after a pretty big move. And as it breaks through that resistance area, Phil, the measured move takes you to $40 on FCX. So that's my expectation for FCX. We own it. I own it personally, and I own it as a trade signal right now. And I think that's going to go well. Same with the coal stocks. And as we talk the rest of the week, there's some other really interesting plays in the commodity space as we move forward. So that's the kind of the thinking right now. And just real quick today, we shout out on your signal. We had a liquidity buy on the Fed last week. We've been following that trade long on the general market. It paid off Friday. Our probabilities tell us Friday, Monday up. That paid off for us, and then look for a pause on Tuesday. So if you trade with us, just go to tradelikeagenius.com. We pump these things out, and we give you guys insight as to trade these things, and you're going to make money. And we have a special running this Saturday. And if you like the day trade, just get Phil's newsletter. It's pure gold, and it will put you on the right side of these SPY trades. Last week, everybody was expecting the meltdown 2.0, and we got just the opposite because we saw that the Fed was buying, put-call ratio was out of balance, and it was an easy trade for us over the last 3 days. So, it's not hard to make money if you're looking at the right information and acting upon it. So, kudos to you, Phil, on that.
Yeah, I just put up that liquidity chart real quick, just so you guys could see. But as we've always been telling you guys, that's a main driver of the market. So it's a signal that we update in the newsletter. And actually, we are going to package up this indicator, aren't we? And that way you guys will be able to, because it's hard in and of itself to read the levels and understand if it's a signaling, should we be buying or selling, because it can be, the levels fluctuate a lot. But Yeah, look for that in November. But in the meantime, the newsletter has the daily updates on that.
Yeah, so pretty much what I want to cover today, Phil. I think the China thing is we could have a few more conversations about this as the weeks go by, but the also the Chinese yuan has collapsed today against the dollar too. So there's a lot to keep an eye on here. This is just round one of a bigger play on China. And a lot of times, what these things happen is, remember, authoritarian governments can move faster than the West short term, but once they get the log rolling down the hill, they can't course correct it very easily because you don't want to tell the boss he's wrong. So I suspect whatever advantages that they're trying to gain here short term will turn around and they'll probably get flanked, and it's going to become a problem for them going forward.
Got it. All right. Well, once again, Bob, thanks for taking a time to go and research another macro thing that we can take advantage of as investors. Seems like a pretty solid play there on the commodity. So thank you for that.
You're welcome.
All right. So that's going to do it for this edition of the Trade Genius podcast. Tell us what you think of all this. Are you guys going to get long copper? You have any other ideas for commodity plays? Let us know down below. We'd love to hear from you. All right, guys. Have a great evening. We'll see you tomorrow. Bye-bye.
Trade Genius.